Today's webinar is Introduction to the CIT-GAP Funds. This presentation is presented by Tom Weithman of the Center for Innovative Technologies GAP Investment Seed Fund. The webinar today is funded in part through a grant award from the U.S. Small Business Administration, the SBA. The goal of this program is to educate startup, pre-startup, and early-stage technology firms in Virginia about the funding sources and resources available to support your ventures. I'm Robert Brook. I'm the Director of Federal Funding Programs at the Center for Innovative Technology. Quickly, a quick tutorial on the three main funding programs available at CIT. That's the Commonwealth Research Commercialization Fund, or CRCF, the Federal Funding Assistance Program, and the CIT-GAP funds. The CRCF is an annual solicitation. The program invests in research and commercialization at Virginia's higher education institutions, companies, federal labs, and other research institutions to advance technology and drive economic growth. 5 main programs historically have been in this opportunity: an SBR matching grant program of $50,000, STTR matching grant program of $50,000, the commercialization grant program of $50K with a $50K match, and a matching grant program for university research programs for $100,000, and an eminent researcher recruitment program. An annual solicitation typically released in the fall. The most recent solicitation closed this past January, on January 19th in 2017. There are typically letter of intent requirements about 2 months before the deadline. Award announcements are normally made in May or June of the following year. Please look into the technology areas of interest. These are announced in each solicitation individually. For more information, or also if you'd like to be added to the distribution list, please send an email to the crcf@cit.org email, or go to the URL on your screen. The Federal Funding Assistance Program works to assist Virginia's university researchers and small businesses, pre-startup and startup companies in their efforts to secure and understand SBIR and STTR grants. These are small business innovation research, small business technology transfer. CIT provides education, consultation, mentoring, proposal, support and training, review courses, referrals to expert outside consultants, a readiness review for those who are looking to understand the GAP fund, and small awards called Phase 0 and Phase 0 awards to help eligible companies provide funding to help hire those outside consultants. And also, of course, the CRCF matching grant programs for SBR and STTR. We have a bevy of webinars available for free to Virginia-based university researchers and companies. The URL below, 3 to highlight, is an introductory webinar, a special one provided for postdocs and graduate students to understand how that program can be used to continue your research. And then also some interesting webinars from tips from award winners. So you can hear how other award winners have used the program to fund their early stage technology companies. For my contact information, please let me know if there's anything I can be to be of assistance. My phone number is 703-689-3080 and robert.brook@cit.org. And the third program is a CIT-GAP Funds program, and from that, I'm going to introduce Tom Weithman.
Thank you so much, Robert. I appreciate your time today, and thank you for all our viewers for tuning in. We'll spend the next few minutes talking about kind of an introductory overview of CIT-GAP funds, a Commonwealth of Virginia-sponsored investment fund to invest in seed stage programs in a variety of technological and scientific verticals. And we'll spend a little bit of extra time talking about the criteria that we use to screen prospective applicants. As Robert mentioned, that we have 4 major lines of business within CIT. If you think of the GAP Fund program and our federal funding program, it falls neatly within the second box on this diagram, CIT Entrepreneur, one of the 4 lines of business within CIT, among them R&D, which houses the CRCF program that Robert talked about, our broadband offering that extends the use of broadband through primarily rural regions of the Commonwealth of Virginia, and CIT Connect, our consulting services offering. Now, if you think about CIT-GAP funds and where it fits in with funding for an early stage technology company. I always like to refer people to what I call this waterfall chart here. And if you take a look at the second block down, third block down, friends and family, and all the extending down to venture capital, that provides you a pretty good insight as to where CIT gap funds fits into the taxonomy of early stage funding. Our model is to invest with early angel investors in technology companies at a pre-venture stage. So everything we do from the time we take a look at a company till the time we invest is all geared around determining, from a due diligence standpoint, what the company does and needs to do from a business and technology development standpoint to garner further downstream investment, either from a large angel round or from institutionally backed venture funds. We invest alongside individual angels or maybe the entrepreneur himself or friends and family and help to spur the company along that growth trajectory. Here's kind of an overview chart of CIT gap funds. Again, we have a seed and early stage investment focus. We embody three different funds, the Gap Tech Fund, the Gap BioLife Fund, and our Clean Tech Fund. So we're investing in a variety of technology areas. By far the largest investment area for us has been through our Tech Fund. And we have a special investment theme there of cybersecurity in close proximity to Washington, D.C., and with assets that have play in the Intel community. There's a large base of assets in which to draw to form new cybersecurity companies, and we have taken advantage of that and done a number of cybersecurity investments. You could think of us as about a $30 million fund, but we're not a conventional fund in structure. We get an annual refresh of between $3 and $4 million each year from Virginia's General Assembly. We typically will look at 400 to 500 companies in any given year and place anywhere between 15 to 20 new investments. Again, our funding sources, our preponderant funding source is the Commonwealth of Virginia, but we've also had benefit from other federal government funding sources like the Treasury Department and the Department of Energy and strategic funds that have been granted into CIT from corporations. We say we're a Virginia investment-focused fund, and that the rationale for Virginia investing as it does in our fund is to create new spillover economic development benefits for the Commonwealth in terms of new jobs created, new companies created, new tax revenues for the Commonwealth. So we do carefully maintain a Virginia investment focus. What that means for us is that the headquarters of a company must be domiciled here in the Commonwealth. The C-suite executives have to come to work in the Commonwealth, and the company must demonstrate a will to build a substantial portion of its operations here in the state of Virginia. We think of ourselves as a bottom line fund because we do invest for these two purposes. One is to realize outsized economic returns, conventional financial returns for investors and for entrepreneurs, and to establish evergreen capacity for our own investment fund so that when we get a return, we can go out and reinvest in new companies, as well as the second bottom line, those economic development spillover benefits, new jobs, company creation, revenues from the Commonwealth. So we don't have the traditional metrics that in terms of ROI that a private fund would have. Rather, we seek to catalyze private capital and view an important measurement for our success is what we term leverage capital, the notion that for every private or every public dollar we put out, we can bring X number of private dollars to work. And if you look at what we can do at the time investment, we usually get anywhere between a 4 and 5 to 1 match of private money to public money. And over the life of the portfolio, we've realized about a 26x return. For every dollar of Virginia money we put out, we've brought about $26 of private money into our portfolio company. We've had multiple exits along the way. We've done 140 plus investments to date. And again, we've had a pretty good ratio of leverage cash, that private money to public money into the fund. And we're presently operating for a good return of capital. Here's our investment team. We've got 5 individuals that are involved in day-to-day operations to fund. Myself, Alex Euler, who covers life sciences for us, as well as some of the technology, who's down in Charlottesville. Dan Henderson, who is responsible for largely for technology here in Northern Virginia and in the Richmond area. Jen O'Daniel, who helps us out around the Blacksburg, Roanoke area in Southwest Virginia as well as Northern Virginia, and Marco Rubin, who handles Hampton Roads as well as our clean tech investment focus. So we have a team that is varied both by geography and by vertical industry focus. We also work very closely, as I'm sure you know, with Robert Brook, who is hosting today's webinar with CIT's federal funding program. So if you look at the investments that CIT puts out, we're good for about $100,000 at the seed stage of investment in any one company. We'll sometimes put an additional second tranche of $100,000, and occasionally, if needed to validate downstream financing, we'll put a little bit more in. But largely, we are a seed stage player. We put seed stage amounts of money to work. But we think we put a lot more to work than that initial $100,000 or $200,000 because we think CIT Gap Funds provides a turnkey network of assets that are useful for any growing Commonwealth, any growing startup company here in the Commonwealth. We have a growing portfolio of technology companies, and that means we've got access not only to the CEOs in those companies, but any employee of that company really to help us diligence technology. We have access to the investors in those companies with whom we've invested in the past. So with every company we add to the portfolio, there's a geometric growth in the number of personnel assets in our network that can be brought to bear to help us source new companies, diligence new companies, and grow new companies post the investment stage. We also have a very unusual formation in our investment advisory board. Here at CIT, we don't make the final go, no-go investment decisions. The investment team that I introduced you to earlier is responsible for sourcing deals and conducting first-level due diligence. But before we make a final investment decision, we take the companies for presentation in front of our investment advisory board. And this is an umbrella organization of 3 separate investment committees, one corresponding to our Gap Tech Fund, one to our Gap Bio Life Fund, and one to our Gap Clean Tech Fund. And these committees are populated by entrepreneurs, VCs, strategic partners, angel investors that have been impaneled specifically for the purpose of helping us render investment decisions. This group of folks is an invaluable asset to companies that come before them and in whom we ultimately invest. We also have a number of strategic business partners that extend our deal flow reach and our syndication reach. We're involved with the National Venture Capital Association. We are involved with the Mid-Atlantic Venture Association, such that we have deep familiarity with funding sources, not only with the Commonwealth of Virginia, but up and down the East Coast and indeed across the nation. We're also very involved with key angel investments groups and have been a part of forming 3 in-region investment groups. Next Generation, or Next Gen Angels was incubated here at CIT, as was VTIN, the Virginia Tech Investor Network, and the Charlottesville Angel Network. We also have worked with a number of accelerators across the country, national VCs. We'll introduce you to a few of those in just a couple of minutes. And we maintain deep ties with Virginia's universities, with special relationships at VCU, at Virginia Tech, at the University of Virginia, George Mason, ODU, and others. This will give you a sense of some of the organizations that have participated on our investment advisory board, part of that rich network that we bring to bear. And this gives you an idea of some of the folks that have taken our investments downstream, our CIT Gap Funds co-investors. It's really just a who's who of investment resources from around the country. So let's spend a couple minutes, as I said we would at the front end, talking about what we look for in a company, our gap investment criteria. We always say that as an early stage investor, we're in the business of approximations. And we make those approximations really around 3 things: around the team, around the markets, and the technology. And what we weight most importantly in all of this is the team, because it's ultimately the people that are going to execute or not execute on behalf of the company that will provide value for shareholders and returns for investors in the Commonwealth of Virginia. So we're looking for full-time commitment from a management team, and oftentimes in early stage investment, such as we're engaged, the team is not completely formed. It may be a lone founder or 2 founders. Sometimes the team is a bit more developed, but we are looking for full-time commitment. We want this to be part of the team's day job and their evening job, developing this company. We're looking for extraordinary people that have an extraordinary amount of integrity, passion, and creativity in what they do. And coachability is also important for us. People that have a sense of themselves, of what they know and what they don't know, such that they can go out and build the right team, bring on the right investors, bring on the right advisors. And oftentimes, because we are working with first-time investors, we don't have the luxury of assessing past track record in terms of building an entrepreneurial enterprise. So we look for other proxies in an individual's background that are apt expressions of a record of high achievement that we think conveys into company building. Maybe achievement in the military, in the course of supporting a larger organization, might be an academic record of achievement, any number of things that can give us a sense of who these people are and what they can do. In terms of investment stage, as we mentioned, we have a decidedly seed stage investment focus. We say that we're investing anywhere from 12 to 36 months in advance of an institutionally backed Series A round. And we will invest in terms of the technology, where the technology is in its development, from pre-prototype all the way up to newly launched technology. So someone can have a product in the marketplace, or it can be a back-of-the-napkin idea. I will say if it is a back-of-the-napkin idea, we've got to have strong evidence that the team or individual that has done the schematic on the back of the napkin can execute. Investment ranges we talked about, we'll do 100,000 or 200,000 tranched. We generally look for a company that has less than $1 million in previous financing, and we look to be a part of a financing syndication if a match is required of up to, but generally not exceeding $1 million. So I said if a match is required. We're comfortable being the only investor in the deal, but it all depends on what the company has to achieve from a technology and business development standpoint to trip that next wire to get more money into the company and keep the company on a high growth trajectory. So more often than not, we do find ourselves in syndication with other investment sources. And I say here we can provide follow-on investment up to about another 250. That is not the norm for us. It is the exception, but we will look at exceptional situations where a company needs more money beyond that base 200,000 to provide validation for new money coming in. We also have a subset of the GAP investment program that we refer to as innovation investments, whereas our GAP investments are made in consultation with the investment advisory board that we talked about earlier. We have a bit of flexibility to do innovation investments up to 50 or 75K depending on the technology discipline, simply at the CIT level, our investment team in conjunction with CIT's CEO and president. We are also looking for a company that has a proprietary advantage they bring to the marketplace. Sometimes a hard and fast intellectual property position is very important. Certainly in the life sciences, it's extremely important for us. But more often than not, when it comes to technology, we're simply looking for a uniqueness and a difficult to replicate head start in technology development. In terms of scalability, we are looking to invest in companies who are engaged in markets with large-scale buying power that have the potential to dominate a market in fairly rapid fashion. And indeed, these are the sorts of characteristics that people that will take our investment downstream, either angels or venture capital funds, will be looking for as well. We're looking for returns that are well aligned with multiples from angels and VCs. If we can't see our way to a 5x return, the company probably isn't the right fit for our investment fund. If we cannot see the way to a company hitting 20 million or more in revenue within a reasonable time period, the company is likely not a fit for our fund. As I mentioned earlier, aligned with the theses of our investment committees, we invest in technology writ large. We've done a lot in software, a lot in cybersecurity, but we will look at other areas of technology in the life sciences and in energy. And again, we have that Virginia-only focus. So that's a brief walkthrough and overview of CIT gap funds and what we're about, and a little bit deeper dive into our evaluation criteria. Rob, thanks for letting me share the podium with you today. Here's my information on this last slide. If you have any questions, don't hesitate to contact me at thomas.weithman@cit.org. Again, thank you so much for your time today.